Hello, welcome back. Every once in a while, I like to take a look at stocks that we have talked about in the past. And I do tend to make a video about these very common companies that people are looking at. It's Apple in this case, a company that we have definitely analyzed in the past. But I wanted to make an update video, and since we have even more content here in our tool, we can actually utilize that in order to make even better decisions. You will see that the current stock price is at 177, and in the future I'm gonna be actually having a module that is gonna be showing the stock splits that have happened for the company. I'm working on this, but the company has 100,000 employees right now, and it's a very well-known company. Of course, everybody knows about it, and you can see some information about their key executives here if you are interested. Of course, Timothy Cook is the CEO. Now, we're going to be taking a look at all sorts of different things in terms of the financials of the company. I'm going to start off with taking a little bit of a look at the social trends here, see what's happening with Apple. You will see a little bit of an increase, and this actually prompted me to make the video. Take a look at Twitter, for instance. The posts and comments have been massively up from yesterday. Same with likes and impressions. And kind of the same thing happens in stock tweets right now. So it looks like the stock is trending, which may be a potentially interesting purchase right now for a trade. But let's take a look at whether this is an actual purchase for the long run, really. And before we do that, a quick look at stock news to see why Apple is surging. And we can potentially take a look at this news now and see what could be causing it. And this one, what Apple's surging stock says about the market right now. We can actually be taking a look at all this information here. I don't think there is an exact reason why, because I'm seeing a lot of different articles here, but not a definitive answer. So interesting. Okay, it's still worthwhile taking a look at the news if you really want to examine more about this. But let's actually take a look at the stock, because again, if we're buying, we're holding for the long run. And this is the 1 month chart here by default. This is 1 month. And you will see that the lowest in the last month it has been 150. And right now it's 175. Today is 177. That was yesterday. And so the company stock price seems to be increasing pretty massively in the last sort of like 15 days or so. What about the 6 month period? The 6 month period, the company has been at about the same level, a little bit lower actually. But if we take a look at the 5 year period, which is like the big picture, you will see that the company has been steadily increasing and had a little bit of a dip over here. And nowadays, of course, also has a little bit of a dip. But generally speaking, it's going higher and higher. Now, the P ratio of the company is a little bit more than what you'd like it to be. Ideally, you'd like something near 20, but it can be fine to overpay for growth. And so this figure here, 29.5, doesn't really tell me necessarily whether that's a good company to invest in or not, or if it's cheap enough. But it does give me a quick way to evaluate what I'm paying based on earnings of the company. It's actually a little bit better though, because it used to be 34 back in 2020. What about the price to free cash flow ratio? This is again a little bit elevated. I ideally would want to get it at these levels if possible. But again, that's not the end all be all, because we need to examine other things about the company before we decide. Revenue growth, net income growth, free cash flow growth all are all positive, which is great to see. Outstanding shares getting decreased. That's a figure that I love seeing. Now, obviously, Apple had a lot of stocks, but it has actually bought back 22% of those. So that's a great thing, because if you're an investor, now your stock is worth more. And so this is something that is very positive. The price to sales is a little bit high, but okay, again, this cannot necessarily tell me whether I should be buying or not. The return on equity is absolutely amazing though. And I don't even know how Apple is doing that, but the return on equity is insane here. And for this alone, I could really think about getting some Apple here, and I would be willing to pay more, to tell you the truth. The price to book ratio is absolutely insane here. I mean, of course, you don't really buy Apple for its book, but it's worth noting it is pretty high. Company pays a little bit of a dividend yield here, which actually went down. It looks like. I kind of like to see that. I'm not a huge fan of dividend paying stocks, but the dividend payout ratio is at 14%. So imagine how much this 0.5% is in terms of actual money. So that is insane what Apple is actually making there. So the next thing that we're going to take a look at is the stock evaluation tool here, and we're going to see how much it makes sense to actually pay for Apple if we want to purchase the company. And you will see that the revenue growth has been at about 5 to 15% for the most part, yet 2021 has been an amazing year for them, in pretty much every figure here. But let's take a look at the averages, which can give us a little bit of a better picture. Now the 5-year average has been almost 12%, so I'm gonna go relatively low here, like 8, 10 and 12 is going to be my high estimate, which actually may be a little bit of a stretch because the 5-year average has been even less than that. So the net income margin is fairly the same every year. That really helps with projections. We're gonna go 21, 23 and 25. And the free cash flow margin, 98 to 110, that's also very close to each other every year. So I'm gonna go 90, 95 and 100. And as usual, I like to get 13% annual return because I can get about 10% out of an ETF. So I want to be making a little bit more when I'm holding a single stock. And if I hit calculate here, you will see that although Apple is an amazing company, it seems to be a little bit expensive to buy right now. And based on the current price, I'd say that this is what makes the most sense. These projections, the medium one. So I would consider actually getting into Apple at around $100 really, just to make sure that I can actually make some money over the years. Now, that doesn't mean that if you buy Apple right now, you won't be making money, because making money has a lot to do with the sentiment in terms of the stock market. But if we're talking about fundamentals and buying a company because it's making enough money to sustain this kind of growth and actually objectively give you money back, then you would have to wait for it to go a little bit lower because it is overpriced right now. Now, I would be willing to pay a little bit of an extra because the company is making tons of money and actually has insane free cash flow and also has a great return on investment, as we examined earlier. The return on invested capital, for instance, is absolutely insane. So I would probably be willing to potentially even buy Apple at about 120 or so, but 177, that is a little bit steep. And even if I go with my high estimates, maybe I would buy at 130 really. But 177, I think I would have to wait for a better discount really in order to accumulate some Apple. Again, I'd like to follow this kind of cash flow projections here because they can really help me and have me avoid surprises in the future. There are other companies, even in the tech space, like Google, for example. I have made a separate video about it, which is a much cheaper buy right now compared to what Apple is. Both amazing companies, but in terms of an investment right now, Apple is cheaper and thus, Google is cheaper and thus is better. Again, as an investment, not as a company. So that's what I wanted to talk about. I hope you enjoyed the video. If you did, please leave a like and subscribe. And you may want to subscribe actually because at some point I will be giving access to all of you to this tool, and so you can do your projections for any company that you want. A lot of things happening here and a lot of things actively being worked on, so you may want to stick around. Thank you for watching this one, and if you did enjoy this video, take a look at this one that I made earlier, and I'm discussing 5 interesting undervalued companies and stocks that you may want to check out for a potential addition to your portfolios. Thank you for watching this one again, and I'll see you in the very next video. Bye bye.